At its core, forensic accounting encompasses situations where forensic accountants work with clients to apply specialized skills to collect, analyze, and evaluate information, and to communicate findings in litigation and investigative matters. However, to get to the point where we actually do the work to serve our clients, there are a number of issues that should be considered, including the planning and preparation surrounding acceptance of the work, how we expect and may be required to communicate with the attorneys involved in the matter, key administrative issues surrounding performance of the work, how we market our services to obtain engagements, liability considerations, and certain adverse events that can arise when we propose on and accept engagements, particularly in matters that are in litigation. The following slides touch on these considerations in further detail. Before a CPA accepts a forensic accounting assignment, it is important to conduct an initial assessment of the case, which may provide answers to questions surrounding the laws or regulations that may be applicable to the case, what the role of the forensic accountant will be in the case, and whether there is the potential for that role to change, the need for a written report and what form that report may need to take, identification of the issues that the forensic accountant will address, the parties that are involved, the timing for performance of the work, and the budget associated with the work. Many of the initial case assessment issues identified are helpful to enable the forensic accountant to determine whether any potential conflicts of interest may exist, whether the forensic accountant has the skills, knowledge, education, experience, and training to testify, and whether the forensic accountant is prepared for the thorough background investigation that is often performed by opposing counsel in expert witness assignments. Once a decision is made to accept an engagement, the forensic accountant should develop an understanding with the client about the terms of the engagement, determine whether the matter is a litigation matter, and whether the forensic accountant will serve as a testifying or non-testifying expert, understand the timing and expectations around report delivery and testimony, and whether there are any arrangements or expenses that need to be considered. The terms of the engagement are often documented in an engagement letter, which may contain provisions including describing the engagement and the scope of services, identifying any independence or conflict of interest issues, enumerating the rights and duties of the parties to the engagement, addressing any privacy, confidentiality, ownership, or other issues surrounding the use of the materials, identifying limitations on liability and damages, specifying when the engagement letter terminates, identifying the fees and or billing rates associated with the work, and acknowledging responsibility and timing for the payment of services rendered. In forensic accounting assignments, it is also important to discuss at the outset of an engagement how communications with counsel should be handled, particularly if those communications may be discoverable. Communications can include written reports, draft reports, any notes that are taken, verbal discussions, or email communications. In a forensic accounting assignment, there are certain key issues that have a bearing on the delivery of the work product, including the timetable of the work and any scheduling considerations, how the engagement will be staffed and supervised, any issues surrounding legal evidence, assumptions, and documentation, and where the documents and evidence are located. In order to obtain engagements, forensic accountants need to market their services. When doing so, we should be careful not to appear biased or to lose credibility. With that in mind, some of the ways that forensic accountants successfully market their services include through speaking engagements, publications, expert referral services and directories, general advertising, email, blogs and newsletters, and websites. CPAs who are new to the forensic accounting space often wonder what liability, if any, may exist with respect to the provision of services. Just like many of the services that CPAs provide, forensic accountants may be liable to the retaining party if due professional care is not exercised. The forensic accountant may also be exposed if there is negligent or intentional spoliation of evidence or for actions that may draw court-ordered sanctions. Forensic accountants who testify are generally immune from lawsuits brought by an adverse party to the dispute. Beyond liability considerations, forensic accountants should also be aware of other adverse issues that can arise, particularly in litigation matters. These issues include unauthorized attempts to use the expert's name and reputation, the use of preliminary opinions offered before the expert has been retained or before the expert has fully evaluated all of the documentation, theft of the expert's opinion, actions taken to conflict out the expert, such as by prematurely sharing case information, late payment and non-payment, attempts by counsel and or the client to shape the expert's opinion or testimony, attempts by counsel and or the client to withhold relevant information, and harassment of the expert by opposing counsel at deposition. Clearly, the effective performance of forensic accounting services requires more than just doing the work. Forensic accountants need to, among other things, consider the administrative issues required to successfully establish a forensic accounting engagement, understand the capacity, timing, and expertise requirements of a potential engagement, and understand the adverse issues that may arise from litigation and other tactics employed by the parties in the dispute.